Welcome, everybody, to All Access, where we're checking out the hot stocks in the energy sector. I'll be your host today. My name is Zunaid Suleiman, and we welcome you to today's show. And we want to make sure that we give you all the information we possibly can today on all the energy stocks and the companies that we have today. And of course, we want to make sure you can also do your due diligence to see if their companies and the investments is worth your money and being a part of your portfolio. A gentle reminder that we will not have a show next week, and we will go ahead and see you after the July 4th date. And of course, we'd love for you to show us some support. So feel free to gently smash that like button. You don't have to be too aggressive, but with just a little bit. We are going to be doing our first $150 giveaway at the end of today's show. So make sure you just fill out the form in the link in the description, and we'll make sure to announce the randomly selected winner at the end of today's show. A quick disclaimer, All Access is one of the ways that Benzinga monetizes our YouTube channel. Every company appearing on today's show has paid Benzinga to be here. We are very upfront about this fact. However, they don't know what we're going to ask them, and they know to expect questions from the chat. So make sure your questions are there and you're active there, and I'll do my best to get your questions answered. Today's All Access is sponsored by Ticker.
What is Ticker? That's right, Ticker with two I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Want perks for owning company stock? Ticker has revolutionized how everyday investors are rewarded for brand loyalty by connecting consumers with perks for the brands that they already own. See where perks you qualify for today by going to ticker.com/Benzinga. That's TIICKER.com/Benzinga. Or to make your life easy, click on the link chat that's going to be going around as well. And it's also in the description. Benzinga All Access listeners, please visit ticker.com/Benzinga, where you can register for a Ticker account, connect your broker account, and receive $20 in Amazon gift cards once your account has been connected for 30 days. Again, we'd love to invite you to come on and hang out with us all day as we'll be talking to the hot stocks in the energy sector. And the first one that we're going to start with is going to be Recon Africa. And we have Grayson Anderson, head of capital markets. Grayson, how are you?
Hi, Zunaid. How are you? Thank you.
I'm doing great.
Great to join you here on a cool but sunny morning. I'm in Windhoek, Namibia.
Wow.
About ready to head up to our well site. So it's super exciting here, and thanks for having us on.
Hey, absolutely. I wish I had that kind of weather. But for now, let's go ahead and talk about what's going on with your company. I'll go ahead and throw up the deck here. And if you could just briefly just tell us about what your company does, and then we'll dive into why you're actually where you are.
Okay, thanks, Zunaid. Recon Africa's exploring in the newly discovered Kavango Basin in Namibia and Botswana. We've got 8.5 million acres across both countries and what we think is the entire basin. Before I begin, I would like to remind listeners that I will be presenting forward-looking information, which comes with its own risks, and that everything that I'll be speaking about financially today is presented in Canadian dollars, not US dollars, because we are a Canadian domiciled company. Just sort of reminding, if we want to jump down to slide 4, Zunaid, just to give a little bit of a reminder of what happened. We drilled 2 wells off an Aeromag survey last year, encountering hydrocarbons, both light oil and natural gas in both wells. And, subsequent to that, shot 450 kilometers of 2D seismic, which generated a resource report that highlighted over 5.2 billion barrels of oil in place and over 2.1 TCF of natural gas in place. And that's led us to this 4-well drilling program that we're going to undertake this year. Having proven up a working petroleum system, we're now in the process of drilling for seismically defined commercial accumulations of oil and natural gas in the Kavango Basin.
Now, your drilling process in that area, what's that kind of like? I know you touched on it a little bit, but if you give me a little more context there.
So we own our own drilling rig, the JRV1, and it's capable of drilling down to, about 12,500 feet. I think if you drop down to slide 10, slide 14 is the numbering that you have. Yeah, slide 14. You could see a picture of the rig there. No, 10 was the right one. Sorry. You could see a picture of the rig there, and it's capable of drilling down to 13,000 feet. We're only going to be drilling down to about 10,000 feet with this well, targeting multiple different horizons. We drilled the first 2 wells with these, and it's been sitting stacked up for about a year, but it's all rigged up now, and the bits either just starting to turn or will be turning in the next few hours. So, it's conventional oil and gas. It's not unconventional like they do in North America. It's conventional drilling. Stratigraphic and stratigraphic and structural traps based off of the 2D seismic that we acquired. So if you want to go back to sort of slide 5 now, we'll talk about the financials.
Yeah, let's dive into that. It's interesting just watching all these pictures and going through your deck and things like that. Like as a kid, I remember seeing all these cranes and I was like, how in the world are they there and what in the world are they doing? So it's kind of cool to get more insight from you. But yeah, let's definitely talk about the financials of the company. And if there's anything else that investors should be looking at, like you mentioned, it's forward looking. So tell us about that regarding financials.
Yeah, so earlier this year, we raised $40 million of cash, and adding to the existing capital we had on the balance sheet. We've got $75 million of cash, which is sufficient to fund our 2022 capital program, that multi-well drilling program. We just finished 761 kilometers of 2D seismic. We're going to look to start shooting another 1,000 kilometers of seismic. So we're fully funded for all of that. We've got no debt. We own our own drilling rig, and we're set up for success here. We also have some outstanding warrants that on success, you would see, you'd see those exercised and additional capital coming in later this year. So if we have success with these wells that we're drilling, we'll be able to fully fund multiple years worth of development.
Now, stepping aside from the financials, I'm sure that you're not the only individual in this kind of space, right? So let's kind of talk about what Recon Africa has that kind of sets them apart from other similar companies.
Yeah, so, one of the things that sets us apart is that we have 8.5 million acres, which is a lot of land, and what we believe is the entire Kavango Basin. Something like this has never happened in the oil and gas space, in the last 50 years for sure. So, a lot of times I say it's like going back in time because we're doing conventional oil and gas exploration using 2D seismic. We drilled the first 2 wells off an Aeromag survey, which is unheard of. And to have the success that we had was remarkable. So now that we have the seismic, we've had the resource report identifying billions of barrels of oil in place and TCF of gas in place. We're now going after these identified targets using our own rig, and we're just starting the first of a 4-well program. These wells are supposed to take 45 to 60 days. We're in a development scenario, these wells will be drilled in 20 days, but we're doing a lot of geologic work because we have such a big basin here. We want to really understand the subsurface, understand the geology, and that's why doing as much scientific work as possible is critical as we go through this, the evaluation and development of the Kavango Basin.
Now I'm going to ask you about the people leading the way, but before I do that, I've got to ask you, sometimes, in my opinion, folks and companies have like an advantage, but then others can kind of catch up. In your belief, in your opinion, do you feel like the advantages you guys have today are ones that'll continue to be advantageous so that way you're always ahead of the competition? And if so, how?
Yeah, so if you want to switch down to the next slide, you'll see the key people that we have, and we have some really world leading type people in our organization. Craig Steinke's the founder, and he's the one that with a solid technical team evaluated the play originally back in 2014. Then oil prices took a bit of a nosedive, and it took a few years before oil and gas exploration saw the light of day. But the other key person as we start drilling this well is Nick Steinsberger. He's our senior vice president of drilling and completions. He's one of the two guys at Mitchell Energy that created slickwater fracking. Now, like I said, we're not doing unconventional here. We're just doing conventional, but
Yeah.
Nick's a completions master. And, he's such an incredible oil and gas guy. I can't praise him enough. And then we also have Diana McQueen, who was the former energy and environment minister in Alberta in Canada, which is a very large producing, province in Canada. And she's one of our directors. And that way we know we've got the best people, to execute on this world-class project. Dr. Jim Granith is the chief geologist behind the project right now. And, Jim's been so excited in evaluating the seismic that we shot last year and, working with our external reserve auditors to identify those 25 different oil locations and 10 different gas locations that came up as a result of the seismic. So we've got world-class people, and we're just executing on our plan.
Yeah, it definitely looks like you have people that know what they're doing with great qualifications there. Now, I want to kind of go back to the basin side of things. So can you describe the basin play map to us a little bit more?
Yeah, so if you switch to the next slide, you'll see the Kavango Basin play map this is a rift system. So the way rifts were, if you go back millions of years ago, all of the continents were together, but then they all pulled apart. Different continents and when they pulled apart, created a rift system. So you had the land like this, continents pulled apart, they created a rift. All the sediments from the oceans and rivers and lakes and things like that from back in those times, hundreds of millions of years ago, got deposited. And over time, when sediments buried on top of them, that sort of cooked the oil and created the oil and the natural gas. So the Kavango Basin is a rift basin. So you've got all these sediments deposited in there over time. We've got three different play types. We've got our primary rift play, which is in the light green here on the map. And then within this primary rift basin, as we discovered once we shot the seismic based on the wells we drilled last year, you've got these intra-rift grobens as well. So that's the darker green sections. And this is actually where we drilled the 6-2 well last year. Now, all of our targets in this upcoming drilling program are targeting the primary rift basin. So basically in the intra-rift part of the basin, everything will be stacked and compressed because you've had the different faults pressing in on the subsurface. So everything gets stacked and compressed. Whereas in the main rift basin, everything will be elongated and thicker and cleaner. And our hope is, given this first well is only 6.5 kilometers from the 6-2 well, is that we encounter the exact same reservoirs, the exact same, the exact same or better rock qualities, and thicker, cleaner sections. So we're also going to be running an MDT tool from Schlumberger while we're drilling this time, which will give us better subsurface pressure and subsurface fluid analysis. So in addition to that logging data and the other logging data that we'll be performing, we'll do a lot of sidewall coring so that we really start to understand the subsurface, match it up with the 2D seismic that we shot, and go from there. Just lastly, you see the purple section. This was something that we didn't know was there until we shot the seismic. It's a Demerara fold play, and it's going to be a gassy play with some gas liquid opportunities. But again, this is a huge opportunity and a third opportunity that we didn't even know existed a year ago. And after shooting the seismic, we identified it. And again, it'll have long-term potential for the company.
Now, you've mentioned the different areas, the green ones, the light green ones, and the purple ones as well. Those are Recon Africa's overall drilling targets, or is there more that you'd like to speak to?
No, those are the primary ones. So this little area that we've got on the map here is sort of the central Graben West area. And that's where we're going to focus because although we have 8.5 million acres, our resource report, which again highlighted lots of oil in place opportunity, lots of gas in place opportunity, really only covers a very small section. It only covers the first 450 kilometers of seismic. We have a lot of exploration to do on this acreage over time. we have this acreage with, with the permitted extensions and so forth, possibly out to 2029 to do exploration. So, it's a real opportunity for us to take a measured approach, and a measured and the most risk sensitive approach is to focus on small areas at a time, understand them well, develop them well, drill them up, and then go from there in terms of potential development. So, our goal here is to find commercial accumulations of oil and gas, test them with the MDT tool to get the subsurface data, and then work with the governments to get this stuff into production.
Got it. Appreciate you going a little bit more detail about the drilling targets. Now, you recently had a completed resource report from the Netherlands,
Yeah.
and they had some interesting findings there. So, can you tell us a little bit more about these findings, and especially how they're driving Recon Africa's drilling strategy and what that could mean for the company overall?
Yeah. So if you go to the next slide, you'll see that these 4 drilling locations that we're targeting, the Mcdougall well is the first one here. It's got 799 million barrels of oil in place, 138 unrisked recoverable based on a P50 basis, so a 50% chance of probability basis. With all 4 wells, we're looking at over 2 billion barrels of opportunity and over 369 million barrels of unrisked resource. So we're going after the oil first. There's going to be lots of associated gas and other gas opportunities as well. As noted on the slide here, one of the things we encountered last year was an active gas seep within the acreage that we have, and this was identified on seismic and brought to us by some farmers who noticed that the sand on their land was bubbling. So we went and worked with them, determined to have an active gas seep, which again is another great indicator of potential hydrocarbons subsurface, and that's exactly the type of stuff when you're doing an exploration program that you want to see. You can see the 3 types of play types there. The primary is the Karoo Rift. Then we've got the intra-rift faults, which is the dark green, and then the Damara Fold Belt, which is gas and gas condensate, as I previously mentioned. Again, each of these wells that we're drilling is going to take about 60 days, and that gives us a nice little horizon here of nonstop drilling.
Gotcha. Now, we've got a little bit more time here, but I want to, so for me to understand, and also for the viewers at home to understand as well, once a discovery is made, right? What's like
Yeah.
the process from there? And I'm also kind of interested in how easy it is to get a resource from the discovery stage to the market area.
Yeah, if you turn to slide 13, I'll go into how we're going to plan to get our oil to market. And the most amazing thing is that since we've had the success we had last year and outlined our plans for this year, we've been working really cooperatively with all the different key stakeholders here in Namibia. And, we're always working with government to make sure we get our permits and satisfy our work obligations and things like that. But what's also really important is we've been starting to work with other key industry participants in Namibia, the railway operators, NAM Power, the power operator. If you see in the dark green line here, that's the South African power pool transmission line that goes right through the middle of our block. So ultimately, we're going to, on the gas side, we're going to want to convert those molecules into electrons by, building a power plant up in the Kavango region. On the oil side, getting it to market initially, on success and then working out a field development plan, we'll sort of target a 25 to 50,000 barrel a day opportunity of trucking and rail. You can see from the pictures on the slide there, Namibia is a former German colony. The infrastructure is incredible. Really well paved roads, really wide, no obstructions. Even the secondary roads that are gravel are very well maintained, can support heavy equipment. We talked about the rig last year when we brought it over from the US. We trucked it all the way from Walvis Bay all the way up to site. And, we're going to take that oil, we're going to put it on trucks, then we're going to put it on rail cars and rail it down to Walvis Bay where there's already port infrastructure there. We'll put an export jetty in place, and, the jetties are capable of handling 500,000 barrel a day, 500,000 barrel tankers that are sort of Suez Max or Aframax sized tankers. So the infrastructure is there for us to get oil to market within sort of 12 to 18 months of a discovery.
Gotcha. Now, I appreciate you answering all of my questions. That's pretty much all I had on my notes end, but I do want to give you the opportunity, Grayson, if you have anything that you'd like to add that you were wishing I would ask you about, the floor is yours if you want to address our viewers and potential investors.
Well, if you just go to the previous slides, Sinead, you can see the seismic that we were working off to determine this next well. The Conway 6-2 well is the well we drilled last year. And like I said, it's in that intra-rift fold belt. You can see the two faults pressing together, sort of compressing everything and pushing it up higher. Then you go over, this is only 6.5 kilometers from where we were drilling last year. You see this P33 well, then you see these big, thicker sections, the exact same plays that we encountered in the 6-2, but thicker, and provides more resource opportunity. And the 2D seismic data that we acquired combined with the well control gives us great confidence as we head into this upcoming drilling program. And we're super excited. This is, we haven't been drilling in a year. Now we're back drilling again, and we're all here in Namibia and excited to see things kick off.
I love it. Now, I love field trips. If I'm ever in that area, 100% reaching out to you, Grayson. Appreciate it. And hopefully you can get to enjoy
come and see us, but be prepared to go through some safety measures and get put to work if you have to.
Hey, I've been working out, so I'm sure I can handle it. Maybe not all that tough equipment. Maybe that stuff, you may not want to let me play with those toys. I might have a little bit of damage there. But no, it's surely been a pleasure talking to you about your company and the process. And it's cool to kind of dive into what you guys are doing behind the scenes, and also what to kind of expect in the future as well. Grayson, thank you so much. Truly, truly greatly appreciate your time. And again, that is Grayson Anderson, head of capital markets from Recon Africa. Thank you, and I hope to talk to you soon.
Thanks, Sinead. Appreciate it. Have a great weekend, everybody, and look forward to seeing you again soon.
Talk soon. Take care. One of the great things about what we do here at All Access is, again, just bringing you all the companies that we believe are hot stocks in the energy sector. And then we give you a little bit of insight, a little bit of research. You get to hear from the executives and the leads at those companies. But again, this is your hard-earned money. You want to make sure you go home and you kind of do your due diligence and see if these companies are worth being invested in and being a part of your portfolio as well. We've got a lot of other great companies. The next one that we're going to talk to is the next person we're going to talk to is going to be Brian, and he is the CEO of United Energy. When Brian and I kind of chatted last time, we had some fruitful conversations. So Brian, figured we might as well do it in front of our viewers. How are you?
Doing well, my friend. Appreciate you having me on.
Of course. We'll start with the easy layup softball, if you will, and then we'll dive into the questions that I know I've been dying to ask you. But tell us a little bit about United Energy, if you could.
Yeah, so I'm happy to. So United Energy, well, it's a 50-year-old company. We're really just getting started. I took over as CEO a year ago. We're about a year behind schedule where we would have liked to have been, but COVID got in the way. It ended up being a blessing in disguise because there are properties that were not available during those times that became available due to the fallout of what COVID did to the energy complex. And so at the beginning of 2021, we decided to go into what's known as the Cherokee Basin, which is northeastern Oklahoma, southeastern Kansas. It's a mature field, but it's known to be a natural gas field. We're very bullish about natural gas. It's kind of a sleeper fuel. Not a lot of people are talking about it right now. And what you'll see over the coming years is this transition to electricity. Well, guess what? Electricity is going to go much higher. Our natural gas prices are not in line with the world market. And as this war on oil continues, natural gas is going to meet and converge into the global price, where it's 75% discount to the world market. Guess what? That's going to cause energy and electricity to go higher. So I hate to be the bearer of bad news, but we are right there in the forefront at the beginning of that, and are going to take advantage of that natural gas bull run.
Now, I definitely want to dive in deeper into your company specifically, but I do have a conversation I want to have with you.
Sure.
So much of the media talk, right, in my opinion, has blamed the oil companies for high gas prices. Yeah. In your opinion, do you believe that blame is properly placed? Or not really?
I don't. I think we all need a collective BS button that we can all push at the same time, because I don't think that there's enough backlash that comes down. So it's really rich. We've gone from hey, we need to transition off of oil. There's a war against oil. We're going to end fossil fuels. To now, it is our patriotic duty to produce more oil. We should be producing more. The to look at an oil gas company to say, hey, you need to bring gasoline prices down. You need to pump more oil. That's only half the story, Zunaid. You can't put oil in your gas tank, right? It's got to be refined. The problem that we have in this country is a refining capacity. So COVID bankrupted a lot of refining companies. Emissions regulations are causing a lot of them to not be able to produce. They're already at 95 to 98% utilization, which means they're at max capacity. There hasn't been a new refinery built since 1977 of major significance. So we need more refining capacity. Otherwise, gasoline prices are going to continue to go higher. And so I think I heard this past week as well that now the blame is starting to shift on the mom and pop gas station owners. I mean, oh my gosh, these guys are business owners. They have gas stations, and now it's their fault that gas is high. It's just sad. I really wish that we would focus on not just the band-aids, but the core problems on bringing our gasoline prices back down.
Now, I'm going to go ahead and follow up on this because you mentioned refineries during COVID crisis unfortunately had to file for bankruptcy. So as you see it, from your experience, which obviously is a ton, especially leading United Energy, what is the main driver of the changes in gas prices, obviously this time to the upside?
Yeah, so that's it. It's the man. I believe we're on there's three tailwinds that this energy complex is facing, right? So we're coming out of COVID, where there was demand destruction. Well, now we have supply destruction. So we have COVID, where we're coming out of this, into the economy. Everybody's traveling again. We can't ramp up production as fast as people think. You can't just go out and flip a switch back on and then here comes production. We also lost a ton of talent during that year or 2 years, where people went into other jobs. They had to make money for their families, so they went into a different career. Well, getting them back into the energy industry is going to be difficult thing to do. There's not a lot of trust there, especially when you've got the media going, oil's bad, oil's bad, oil's bad. So we've got that tailwind of COVID. We have inflation, which is hitting everything. That's due to monetary policy. And then we have the war in Ukraine and that issue going on. So you have these three tailwinds. Any one of those three would have caused prices to go up. And we have all three. So it's like this perfect storm, and perfect is a bad word to describe it. But they're all converging on us, and I don't think we're going to see the end of it anytime soon.
Now, I obviously am not a CEO of any company, so kind of help me understand, when you have these unfortunate perfect storms happening, how has your company prepared to deal with it? That way you're not as impacted as the other companies that unfortunately have been on the negative side.
Well, the advantage we have being an energy company, if you were one of the chosen to have made it, because what COVID did, it caused capitulation, right? Capitulation is when people are hanging on, right? And they can't handle another major significant setback. And then COVID comes along and just wipes those people out. You had the remaining companies that had managed to get through that. So they're in position to take advantage of these prices. So we have the advantage that we can produce. We have a market to buy everything that we can produce. So our really only obstacle is how quickly can we bring on production, right? And so we are in leases now. We have own leases that we're producing prior to COVID that got shut in. It wasn't economical for the prior operators to run those. And so our main task, your prior guest was speaking about drilling. We have drilling, but that won't be for years to come. Our main job is to try to turn these wells that we're producing back into producing wells. And we have a market that is hungry and thirsty for everything that we can produce. And so that kind of puts us in a unique situation as a company.
Now, we've talked about it, and obviously, unfortunately, Americans have also seen gas prices go up and things like that as well. Let's have an honest conversation about, as those gas prices have gone up, have your profit margins increased as well? And of course, the reason I ask this is mainly to have our potential investors that are viewing this right now to get an idea of what to expect from your company in the future. So to recap it, gas prices have gone up, cost has gone up, but have your profit margins increased as well?
Yeah, Zunay, good question. So there's kind of a break even, and it's just math, right? What does it cost what's G&A? What's the labor? What's my cost of goods sold? What's my operating expenses? It runs about 30% of production, but those rise. And a company has to decide, see, natural gas and oil is a declining resource. It doesn't produce forever, right? So you've got to continually invest back into your reserves in order to bring production, at a steady level. So this notion that we're at record profits, well, they might be record revenues, but we've got to invest back into these reserves. Otherwise, they're going to run out. And so a few years down the road, we won't be producing as much as we do now. So the idea that, we're coming out of COVID, we've got a year, there were coffins that were just, or resources that were just expended and just wiped out. And so we've got to fill those resources back up as a company to be able to bring on those reserves. So just because prices are good now, we're not out of the woods yet. Like, there are a lot of companies that have to become healthier by putting those dollars back into the reserves. So we're a long way away from spending all our profits of it as a company. We got to put those back in the reserves.
Now, you kind of briefly mentioned this as well, but obviously, as companies, you have a responsibility to make money. That's why you're in the business, and of course, you have responsibility to your shareholders as well. But I feel like you also have responsibilities to make sure that the average American can afford the services that you're providing as well. How are you kind of making sure that that part of your responsibility is a priority at your company?
Well, Sinead, I tell people when they find out I'm in oil and gas, and they're like, "Oh, you guys are doing good." I'm like,
they automatically don't like you.
Oh, they're like, "Oh, you're doing great." Well, no, I pay the same amount at the pump that you do. We don't have a secret gas, tank in the backyard that we go fill in. So I feel that pain. Listen, transportation costs for us. We have guys that work in the field. We're paying thousands of dollars a day in fuel costs. So we feel that pain as well. The best thing I could do is, for our communities is to give back. We run programs throughout the year. We did over the holidays last year to help our communities. We want to be, well looked at and favored in those communities. We want to be known to give back. We work with landowners. These are farmers in many cases. That have been in these areas for decades. So we want to have great relationships with them. So we can make a great impact on local communities. We're still on a smaller end of the life cycle as a company. So that's where we can make the most impact, are those local communities that we work in.
Now, we've talked about the money aspect of it, but let's talk about financials when it comes to your company, United Energy. What are your financials looking like? Do our investors possibly have any concern in terms of raising more capital? Talk to us a little bit about the financial health of United Energy.
Yeah, sure. So we are what's considered pink current. So we're not fully reporting yet. Again, we're not even a year into this corporate launch. We made our splash on August 1st of last year. So we're coming up on that year. Our goal is to uplist. We are about to engage an investment banking company that will take us through that process, give us the international or the institutional exposure, and then work on a path to uplist. Having a public company is like having two companies, right? It really is. You've got operations, which you've got to maintain, and that's where the revenues come from. But you have this whole other side of the business entity, which involves filings, which involves regulatory reporting, which involves bringing this public company, back into kind of as public companies fall off the NASDAQ and go into the lower tiers of the exchanges. We want to work our way back up that ladder, right? We want to eventually be back on a listed exchange. So we're putting our financials out. We're showing slightly small increases in revenue. There's some acquisitions that we're targeting right now that won't be reflected until the third and fourth quarter of this year. But we have a goal to aggregate and amass as much natural gas acreage as we can. It takes time. It doesn't happen overnight. We are in the midst of raising capital kind of all the time. We put a round one together last fall, more of a friends and family and professional kind of raise. But we have fantastic shareholders. We have a strong shareholder base. They're behind us, big supporters. So there's not a concern, especially where we are in the energy cycle. We believe that capital will be somewhat out there to find for good quality companies. And we're at a 25 million dollar market cap, which is tiny compared to our competitors. So we have a lot of upside to go.
Yeah. Now, I know when I invest, I'm not just strictly looking at, hey, do I use their products? Do I do XYZ? How's the outlook? But also kind of looking at, hey, do I like what they're doing to kind of help the community and different things like that? And obviously, when it comes to oil and gas environment, kind of the environmental damage sometimes can kind of come into play from other
Sure.
people's
Yeah.
perspective. What is United Energy doing to kind of make sure that our lovely planet Earth
Yeah.
isn't being as negatively impacted as years ago that might have been the case?
Yeah. Great question. So if you were an E&P and you came through COVID, you realized that, if you didn't have multiple revenue streams, or you weren't going to make it, right? So you live by the sword, die by the sword. So what we did during COVID, we had time to think because we weren't developing. Everyone, we were at home sitting at home like everyone else is. We went out and secured a couple of technologies. These technologies are going to go a long way in being able to produce hydrocarbons, natural gas, and oil more efficiently and cleaner for the environment. There's not a person I work with that I don't know doesn't love to be outside, doesn't love nature, doesn't love to be on the beach, doesn't love to go to the mountains. We care about the environment as much as anybody else does. So the two technologies that UNRG has, one is a pump, an air pump that can eliminate basically the old archaic pump that you see on the surface. It can remove everything down whole so that we can clean and beautify the surface of that land and kind of remove the eyesore that maybe an oil and gas operation would have. We also have an oil shale technology that it doesn't use water, doesn't use harsh chemicals, and can produce oil shale cleaner, more efficiently, and better for the environment. So I really think that we need our industry could do so much more, right? If given the opportunity. We're trying. If given the opportunity to come to the table, I believe capitalism, can solve a lot of the issues that we face. And there's a lot of smart people in our industry that can come together and put those solutions out and kind of change and let everybody know that we care about the environment just as much as everybody else does. And we have the power and the intelligence and the money as well to fix those issues. And so that's what United Energy is doing.
Yeah. Now you mentioned, if we could come to the table and different things like that. I don't want to put words in your mouth, so I'll just ask you, what do you feel in relation to your company, and of course for potential investors, that what do you feel like our administration needs to do to kind of help the unfortunate perfect storm that you talked about before, and to kind of help us get out of this, so that the
Yeah.
average American doesn't have to decide if they want to get gas or other necessities?
Well, no, it's a great question. I miss the old days. I mean, even the past two administrations used to do this. They used to bring the CEOs into kind of a roundtable discussion into Washington. That hasn't happened yet. The president hasn't met with the CEOs and discussed what changes. What's scary is this transition that we want to make to alternatives, but yet we're asking other countries to do the dirty work and produce oil. Right. So why not ask our, domestic E&P companies to do that? What's the environmental effect of a tanker going from halfway across the world over our oceans to the U.S. when simply we have it here? So those questions aren't being asked to our industry. And I really wish that this administration would gather, the best minds in our industry together to look at those solutions, because we're not going to transition quickly. Petroleum, Zunaid, is in everything that we touch and use. The chair that you're sitting on, the microphone you're talking into, petroleum is going to be here for a lifetime. It goes into so many things, including the plastics in the electric vehicle.
So I'm glad you brought that up, because that's exactly my next question. I know that before I was a little bit had more insight and knowledge, I always thought, cool, gas stations were going to go away because of EV. I mean, do you share that same sentiment, or do you have a lot more insight?
No,
Because
not
with
at all.
EV being more popular, are you worried about the future of your job, your company?
Yeah, again, not in our lifetimes, Zunaid. There is not enough power in alternatives presently to I mean, we consume so much energy. We just don't even realize how much energy we consume.
Yeah.
And so again, going back to natural gas, why we've chosen natural gas as our market. Where does power come from? Right? Where the lights power comes from? Power plants. What fuels those power plants? Natural gas fuels those power plants. Coal fuels those power plants. And as coal switches to natural gas, there goes back to the idea that natural gas prices um, have been stunted and will converge into the global price range simply because we've been on this island where we have this natural gas in abundance. Well, now we have what's called LNG or liquefied natural gas to be able to export this natural gas to the world. That's going to only raise our prices. We've recently signed an MOU with an international supplier of energy, supplier of natural gas to power plants that run off of natural gas. They have customers and they want to supply. We hear about supply chain shortages, right? Supply chain shortages and everything, including baby formula. There's going to be a supply shortage of natural gas because now we've committed excess supply to Europe. There are corporate companies that are trying to lock up their supply to provide to their customers, and so that's going to put a constraint on the everyday average consumer that uses power.
Now, it's interesting you mentioned that because I think that's kind of the misconception that some investors have. It's like, oh, I don't want to invest in energy, oil, and gas because I believe EV is the future. But it's
Yep.
a good reminder that, hey, just because you don't believe different products aren't used at different things, they kind of are. And, like you said, not in our lifetime. But we've got a few more minutes here. But again, those are all the notes and questions that I have. I appreciate you kind of letting me dive in to a little bit of the opinion side of things that may not have to do with your company. So I appreciate you giving us insight from you and your company's side. But lastly, is there anything that you were hoping I would ask you? Or is there anything that you want our viewers and potential investors to know about when it comes to you and your company, United Energy?
No, absolutely. So again, we're on the beginning life cycle of our journey. We took over. I took over as CEO a year ago. We launched our corporate directive into natural gas. We have a storage component. We have an investment in the storage facility in Louisiana, and we have a tech component where we want to bring technologies to the industry that, as we mentioned before, will be better for the environment, will be better and more efficient to produce. And so to give back in that regard. So we're a multifaceted, multi-revenue based company, but we're still at the beginning. We'll be adding soon to our C-level suite and to our board of directors. We're on our path to do a major roll up in the basin that we're in. As far as I know, we're the only public that is in the neighborhood. And so there's several privates that we're targeting and want to get into discussions with to roll up. We see a massive opportunity to be able to accumulate natural gas assets right now. And we'll be doing that over the next 12 to 18 months.
Gotcha.
Yeah.
I'm smiling because there's our lovely loyal viewer, Born to Be Free, who's asking where your shirt's from. Apparently, he's so fascinated by your shirt that's what he's paying attention. That's what he's paying attention to during this interview. I'll see if you want to answer that or not. There you go. Under Armour. You were wrong. It's not Nautica. It's Under Armour. What a great reveal there. It's like Superman there. I love it. Since we still have a minute or two, let me ask you this, right? Let's hope that you and I have a conversation at the end of the year in December.
Correct.
What are two things that you're hoping you can achieve by then?
So we have several assets that we're looking to roll up and acquire. And then we also are hoping to report our full revenues at that time. So at the end of this year, if we come together again, let's talk about the assets that we've been managed to close on, the partnerships that we've been able to form, and then the production revenues that we've been able to put into the company. I'll make notes because I want you to have me back on, and I want to have that conversation.
No, absolutely would love to, and I'm sure there's a lot. Well, let me ask you this, because I still got about 40 seconds with you.
Yeah.
A year from now, what are you hoping to achieve? So you gave me 6 months. Now give me 12 months.
We'll be on a major listed exchange, either the American or the NASDAQ. But I've got to do a lot in our market cap because there's certain minimum level pricing. But your investors can put two and two together. If we make it to one of those exchanges, they're gonna be doing really well.
Hey, I appreciate you and I appreciate your time. This is Brian, CEO of United Energy. Thank you so much, Brian. Truly, truly appreciate you coming to spend your quality time with us.
Appreciate it.
No problem. again, it's always fascinating to get insights from the companies, right? Because for me, I look at the charts and I see what's kind of happening in the price action. But when it comes to the fundamentals, if you're a long-term investor, that's kind of the main thing you want to focus on. So it's great to kind of have some insight. But again, we're giving you a little bit of a peek of the conversations. It's up to you to have your own due diligence and to see if it's worth your hard-earned money to be in your portfolio as well. We've got another great company coming up, and it's going to be Don, who is the CEO of Desert Mountain Energy. Don, how are you?
I'm good. I'm good. I'm actually president. Robert Elfing's our CEO.
My apologies. That'll be president. I definitely would not want someone to have me called by the wrong title. So my apologies on that. Um, Pleasure to have you here and have a conversation with us. If you could, just for the viewers at home, tell us a little bit about what your company, Desert Mountain Energy, does.
Desert Mountain Energy is building a vertically integrated primary producer of helium in northeastern Arizona.
Love it.
Uh,
Good. I'm sorry.
yeah, so 95% of helium comes out of natural gas. We're a little different. We're in a nitrogen environment. We're drilling wells just like you drill a natural gas well. The difference being that we'll have helium percentages running 1% to over 7%. And the majority of the gas is nitrogen, which you can vent off. So we don't require the pipelines and collection centers that the natural gas producers require.
Now, when it comes to, and this is, I love this all access because it gives me insight into companies that I typically, when it comes to energy sectors, a little different for me. So when you think of energy, or at least when I do, I think of like oil, natural gas, renewable energy. What role does helium play in energy right now, and also will play, you believe, in the future?
The biggest reason we've retained energy in our name is because we're going to run our processing facility off of solar backed up by hydrogen that we discovered in our helium fields. We've actually got sulfur-free helium pay zones within our helium wells. And the helium itself is used for all kinds of modern technology. It's mostly used as a coolant. MRIs, for example, use helium when they start up. You can hear the magnets starting to go within the MRI. But all the big data centers, whether it's Amazon, Google, Facebook, whoever, they're using helium as a coolant. And it's used in a number of different manufacturing situations, like fiber optics need a helium environment to manufacture the fiber optics. It's got a component in all liquid hard drives, that type of thing.
Now let's stick to the topic of helium, right? Recently, I believe you guys received permits for two new helium wells in Arizona. What does that process of drilling for helium look like? And then, of course, I want to talk to how it's beneficial for the company itself as well.
Well, to date, we've drilled 7 successful wells. 4 of them are wildcats. And in Arizona, because it's not an oil and gas state, the entire state's only seen about 1,200 wells drilled in it. So when we go into a new area, it truly is a wildcat. And we're 4 for 4 on wildcats. We've drilled 3 offsets that are going to go into production here in Q4. And we've got 3 helium fields. So the next well we're drilling is Gunner Dome, and we're hoping to discover a new helium field with that well.
Got it. And of course, I know we have a slide deck from you as well. So if you'd like to refer to that at any time, please feel free. Would you want me to pull it up right now?
Sure.
Awesome. So we're going to go ahead and add that here for you. And of course, as we speak, if there's anything you want me to refer to in the slides, please do let me know. Let's talk a little bit about taking a pivot from helium. Let's talk about noble gases. Again, I'm not really familiar with it. So if you could kind of give me some insight on what they are and the use rate, or the reason to use them.
The noble gases that we have are in minor percentages. In the first field that we drilled and discovered, the Rolfing field, we had argon, krypton, xenon, and neon. And neon is probably the one that really stands out right now. 60% of all neon production comes out of the Ukraine. With the conflict that's going on in Eastern Europe right now, Putin has decided to ban any exportation of either helium or neon.
Yeah.
the world's running with a critical shortage on the helium side of things right now. The global shortage is about 18%. They are literally shutting down MRIs. Hospitals and clinics can't get the helium. So the neon, there's some, I'm not as familiar with neon because we don't have as much of it. We're primarily focused on helium.
Yeah.
I think it's used in lasers and that type of thing, or some of the
Sure.
bigger uses of it.
Sure. When it comes to the unfortunate concern with Ukraine, um, how is your company kind of set up, not just with that particular issue, but with anything where you mentioned the shortages and things like that yourself? How is your company set up right now to be able to come out ahead um, after these unfortunate events get taken care of?
Well, this deficit in the helium industry is not a short-term fix. Part of
Yeah,
the issue that's happened there is because 95% of it comes out of natural gas fields. And one of the big issues that happened in Russia was Gazprom had built the Amir complex, and it was coming online in February, and it blew up. That was supposed to supply up to 25% of the global demand of helium instantly off the market. And with the sanctions in Russia, I don't see it coming on anytime soon. At the same time, in the US, there was a federal facility that's 70 years old, and it's had serious maintenance issues, and it's been down for several months now, and that's 40% of the US domestic supply. What we're targeting is basically Phoenix. In and around Phoenix, we've identified 40 end users, and we're hoping to be able to fulfill a small part of the vacuum that exists out there. The helium price has gone over the last 3 years. It was $100 3 years ago, and these are crude helium prices. Crude helium
yeah,
price is referring to 90 to 95% pure helium. It jumped up from 100 to 300 when they auction off the final gas at that federal facility. And then the maintenance issues along with Russia caused the price of helium to triple in the last 3 months. So we're now looking at 1,000 an MCF for crude helium, and vertically integrating the company will be allowing us to sell helium that we've drilled for, and we're producing our own wells for somewhere around $2,500 an MCF. So our margins end up running north of 90% on that.
now, I'm glad you mentioned margins. As we deal with, just macro events and things like that, the prices obviously go up. Do your profit margins also go up, or do you feel like, hey, there's certain costs that we have to deal with on our end that unfortunately, not all Americans see, that kind of make those profit margins the same as they were before the crisis?
Oh, we're definitely dealing with inflation. Best example I can
Yeah.
give you is when we moved a rig onto our very first well. So we're talking the end of July in 2020, 18 months ago. The cost of moving that rig was $25,400. When we downrigged in February on well number 7, that move was $173,000. Now, to combat these kind of inflationary pressures, we've had a very strong treasury. We ended up with over 29 million in the treasury. And we had an opportunity to buy a trucking fleet out of a divorce case. So we ended up with 5 super heavy haul tractors and 3 16-axle lowboys for $715,000.
Yeah.
And we've got them contracted 3 years in it, or 2 years in advance right now. When we're not using them, we've got them contracted out there, and we'll probably make $2 or $3 million off the tractors this year. In addition to that, steel costs have doubled, cement costs have doubled, diesel's basically doubled. So you need to stay ahead of that curve. And if you've got money in the treasury, you can pre-order stuff. So I can buy it today to use 2 months from now,
Yeah.
and maybe stave off 20% inflationary pressure there.
We're talking about costs, so let's talk about the financial health of the company. Give us a little bit of insight on what that's looking like.
We're spending in US dollars because we're in Phoenix, but we're listed in Toronto on the Venture Exchange. And right now we've got about 12 million Canadian in treasury, and I'm looking to raise about another 7.5 million Canadian right now. We like to top the treasury back up to 19 or 20 million to continue with the strategy as we move forward into production. We should be taking delivery on our processing facility probably end of July, August sometime. Get it delivered to the site and start to set up the processing facility. And then once that's all completed, we can start to process our own helium and sell it directly to end users. And then we'll be in positive cash flow.
Speaking of positive cash flow, making these investments, once you make an investment, I understand there are different types of investments you may make, whether that's hardware, software, different things like that. How long is the average, if you can kind of ballpark it, till you get a profit on that investment? So you can get an ROI, because you mentioned you're looking to raise capital down the road possibly, and you're looking to make some more investments and you're taking deliveries and things like that. So these investments that you're making, average time before you can see profitability on those investments.
Once we get through to production,
yeah,
basically, a well costs us about $1 million US.
Yeah.
And if this facility can be operated at 80% capacity with 3% helium running through it, that facility should see a net bottom line profit of about $500,000 per day. So, I mean, you can go and argue that we pay off a well in 2 days of production. We don't know what our flow rates are on our wells yet. All I can talk to is the way that the facility's been engineered. And once we start to get into production, then we can start to real world flow rates and real world numbers and quit making stuff up.
Well, you've got someone in the track, Frank, who wants to ask a question. He wants me to ask you if all your gas is sold or if you still have some left for purchase. Would you be able to answer that?
Yeah, what we're doing is selling our gas at spot. We do have a supply number and same day payment number from the US government, for example. Yeah. And that is going to be more or less our business model. You show up at the facility with your truck, pick up the gas, and we'll let you out the gate when the money arrives in our bank account. Because I don't know the flow rates on our wells, I don't know how much gas we're going to producing. Right. But we believe we will only be able to satisfy a small amount of the vacuum that exists in and around Phoenix. So you've got very large companies there. You've got the chip manufacturers like Taiwan Semiconductor and Intel. We'll be looking more to sell to people in the lifting market, the welding market, that type of thing. We don't want to get into that field where the specifications are so tight, they're difficult to deal with.
Now, I've got a couple of questions that I want to end the conversation with, but I do want to give you the opportunity, Don, if you have anything that you were hoping that I would kind of speak about, or any questions that you're hoping I would ask you, anything you want to address our viewers right now?
Not other than, we were in a very much a bull market this time last year. Like our stock was $4.95. We'd only drilled 2 wells.
Yeah.
Right now we're trading around $2.60 to $3. We've got 7 wells. We're looking at the finish line going into production, that type of thing. So I think it's an opportunity in a market that is completely adverse to speculation right now.
It's interesting you mentioned speculation, because if I got my notes here, over the last 6 months, your company's stock had risen approximately 35%. Obviously, the market was in a little bit of a high as well, but what do you believe kind of helped that stock rise? And what do you think was kind of behind it? Or do you strictly believe that it was just the bull market?
Well, part of it was, when we announced a successful well number 4 in September of last year, I got to enjoy $200 million fall off my market cap in 2.5 hours.
Wow.
And the market didn't understand. They were looking at the percentage of helium in the well. It was 1.137% as opposed to +4 and +7. But that well taught us a lot about what rig we needed on site, what kind of redundancies. We learned a lot about downhole geology because nobody had ever drilled there before.
Yeah.
And during tax loss season, in December, I think $2 warrants said we'd forced out, people crystallized tax loss. And then we had a well that was in a legal challenge, and we won that appeal. And then when we drilled our 3 offset wells, they averaged 3.511%. So all of a sudden the market jumps up to 440. And, over the last couple of months, it's just kind of drifted off. Regardless of how successful we've been,
Yeah.
People are cashing out in the equity market.
Yeah, we've definitely seen that, especially with the market being 20-30% off the highs as well. Obviously your stock price, you kind of mentioned it briefly, but I know you can't speculate on where you believe your stock price should be, this, that, and the other, but let's talk about, what do you believe the market has wrong when it comes to your company, or what misunderstanding they have when it comes to your company, whether it's the financials, the macros, the fundamentals, whatever. What do you believe our investors should understand that maybe others are missing?
Number one, we're not a natural gas play. There's lots of Western Canadian natural gas plays. We're different in the fact that we're in nitrogen, and the way we process the gas, the simpler the gas coming out of ground under natural pressures, the easier it is to process. We are not a refinery. We're simply separating elements, starting with nitrogen, isolating the helium, purifying it, and selling it to end users. When you start to deal with the natural gas plays, it's way more complicated. I mean, you're dealing with water, condensate, sea gases. If you've got hydrogen, normally it's hydrogen sulfide, because it's encountered sulfur along the way in the system.
Yeah.
I believe we're the only field in North America that has sulfur-free hydrogen within their helium fields. It's very, very unusual, and the hydrogen will monetize. We just haven't figured out what we want to do with it yet. So in the near term, we're going to use it to back up our solar facility.
When it comes to, and I'm glad you gave that insight, because again, a lot of times people are like, oh, they focus on this, but it's like, no, we kind of focus on this, and that's where we're looking to go. We've got a few minutes here. I want to talk about the environmental part of things, right? So what is your company doing to make sure that they're taking care of the environment and helping that part of the social aspect, of social responsibilities?
Right. We feel a lot of pressure from the environmentalists in Arizona, and rightfully they're concerned about the aquifers. Water is a very valuable commodity in the desert. So what we've done is pioneer downhole procedures when we're drilling, and we don't use traditional downhole muds, for example. When we go downhole, we're drilling into a salt basin to start with. And when you're drilling with water and air in a salt basin, the salt wants to dissolve and cave in on you. So Rob's come up with some procedures using disaccharides, pectin, and jello downhole. Yeah. And that allows us to basically coat the salt on the way downhole to keep it from dissolving as quickly.
Yeah.
And then as we drill, we've got cement procedures that we've put in place, because we don't want water in our holes. Regardless of the environmental aspect, we don't want water in our holes.
Yeah.
So when we set our surface casing, we force cement back to the surface. And when we set secondary casing, again, we force cement back to the surface. And when we set our final stage casing, again, we set cement all the way to the surface. So
yeah,
we seal off all the aquifers. And then when we perforate the pay zone that we're going to produce out of, we set off armor piercing charges at the depth, and it's very precise. We're talking, millimeters of precision here. So we're only getting the gas coming up into the production casing and to surface, and we're not having to deal with any water.
When it comes to, responsibilities and things like that, you already mentioned that. Now, when it comes to investors or possible investors, potential investors that are watching right now, what are you hoping to accomplish in 6 months? So by the end of the year, what is something that Desert Mountain Energy is hoping to have accomplished?
By the end of the year, we're hoping to be a fully recognized, vertically integrated primary producer of helium that drills their own wells, produces their own wells, processes their own helium, and sells directly to end users at a substantial profit. And at that point in time, we can continue to expand on cash flow and not have to go back to the markets. and ultimately be rewarding our shareholders with stock buybacks and dividends.
Now that's a 6 month outlook. Anything that you're hoping to do after you achieve that? So basically 12 months from now, where are you hoping to be?
We want to get a second processing facility
Yeah.
up and running here in the next 12 months. That'll potentially double our revenues. And, we're looking at some areas outside of northeastern Arizona, but right now we're laser focused on the Mcdougall Helium field and getting that one turned on first.
Got it. Don, president of Desert Mountain Energy, it's been an absolute pleasure. Thank you so much for spending this quality time with us this morning. Wish you and your company the best of luck, sir.
Thank you very much.
Take care. Again, I mean, I can't say it enough. It's always great to get insights from companies, but make sure you're doing your own due diligence. By the way, Frank, that was a great question. I'm glad you asked that. Born to be Free, your question was great too. Don't you worry. But we've got a couple more great companies. The next one is going to be, Rock Resources. And we have Cameron, who is a CEO and co-founder and chairman. How's it going?
Good. How are you doing this morning?
I'm doing great. Pleasure to talk to you. Excited to kind of get some conversations going here. But of course, explain it to me like I'm five, what it is that you and your company do.
So Rock is a oil and natural gas production company. We explore for and produce oil and natural gas in Western Canada. We're a publicly traded company on the TSX Venture Exchange, and that's new for us. First time in the public markets, but our team has been working for the past 15 years together, drilling and building companies, in particular in Southeast Saskatchewan. We've typically built privately funded companies, built them up to 1,000 to 2,000 barrels a day in a couple of years, and then sold them to the mid-sized companies that typically in our basin, and they acquire by or grow by acquisition. So our role in that ecosystem has been to drill up new pools, and eventually we package them up and sell them off to a major public company. The move in 2019, we saw that the oil industry in general was very undercapitalized, and across the various producing countries, we were seeing declines and very little in the way of investment. And so we made a move into the public space so that we could access a little bit more capital, and that would allow us to do acquisitions as well as the organic drilling that we traditionally done. So in March of this year, we just closed a major acquisition. We were able to pick up about 3,000 BOE a day of production, primarily focused in our core operating area that we've been working for the last 15 years, and properties that we'd had our eye on for a long time. Luckily, we were able to negotiate that price point in late 2021, so the price was pretty good. Just as it turned out, we closed the deal on March 7th and locked our hedges in on March 8th, which was pretty much the high in oil prices. So we were able to lock in a couple of years of oil hedges to protect our debt side on one of the highs in the market. So that's really been a key piece of news in our business, and lets us now take all of those properties and do what we do best, which is drill and grow production.
Now, you mentioned Southeast Saskatchewan. I'm going to assume that you had a couple of different places you could have possibly had the location for your assets. What about Saskatchewan and Southeast was advantageous to you and your company, you felt?
Yeah, I've had quite a bit of experience working throughout Western Canada and even down into the United States. The reason that I feel that Southeast Saskatchewan play is the best place for us to be. We're drilling wells that cost us just a little over $1 million. We're getting payouts in 3 months. Netbacks are anywhere from $70 to $100 Canadian. So one of the most economic plays in the basin is the Frobisher in Southeast Saskatchewan, and it allows us to take capital, utilize it to build our production, cash flow, and reserves, and within 3 months on those type curve wells, we're able to have that money back in hand and do it again. So we really like that aspect. It's at the downstream end of many of Enbridge's pipelines. So in tighter, higher supply times, it's a good place to be in the market. Very, very little in the way of transportation differentials. So it's positioned well for marketing, but really, really quick turnarounds, and a very friendly area to work. A lot of farmland mixed with oil field in there. They've been drilling and producing in that area since the 50s. So very mature regulatory environment and good place for us to work. Our head office is only a couple hours away from the oil field, so we can keep a close eye on everything. This asset also included a block of land in Alberta, a couple hours northwest of Edmonton, an area that I'd worked in a previous life, and multi-zone oil and gas area, sort of tucked in against some major companies, Paramount and Whitecap, where they are producing oil out of the Cardium and gas out of the Montney, and we have a lot of infrastructure in there thanks to this acquisition, and a good geological staff. And that's another growth engine for the company. So we picked areas where there's existing infrastructure, high netbacks, and a lot of growth potential for that organic growth that we like to do.
Yeah. Now, I want to talk about the staff in a second here in the board of directors, but we do have a question from the chat. Jay Money wanted to know, does Rock plan on expanding to the U.S., and what are their long-term goals? Would you be able to address that for the viewer?
Yeah. So we don't have any plans to pick up any new jurisdictions right now. We believe we could double our Saskatchewan assets just with the properties we have. And Saskatchewan is like a lot of areas through this low oil price that we've seen since 2014. There's a lot of private companies that have had shareholders with their money in and no liquidity. And so in and around these assets that we've purchased, there's a lot of smaller private cos that we believe will look favorably upon an acquisition if we're moving in that direction. So we think we can grow in our two jurisdictions we currently have. We don't need to expand beyond that. Kaybob is also, because it's a multi-zone area with a lot of players in there. There's a few acquisition opportunities, just tuck-ins that work really well within that area. So I don't think you'll see us in any new jurisdictions. Having said that, every opportunity that you'll always take a look at good opportunities, but I don't think you'll see us deliberately looking beyond what we have today.
I appreciate the insight. I appreciate you answering Jay Money's question here. Now, I obviously get to be the face of this all access event as a host, right? But there are many men and women that kind of help us with research, production, and putting this show together. And the reason I bring that up is because you've got a board of directors. And of course, I want to speak to why their knowledge is important to the company's success, because we can't talk to them, but I can talk to you. What is it about their knowledge, and why are they such an asset to the success of your company?
Yeah, I think a board of directors is an opportunity to bring talent in that you maybe don't lean on it 8 hours a day, but you're bringing wisdom to the table. So we have a very experienced oil and gas accountant that's heads our audit team, Dave Hergenheim. Peter Yates is a securities lawyer that's had a lot of experience with juniors and just public reporting. And that's obviously a very important asset when you're going into acquisitions and we're structuring acquisitions and just walking through all of the regulatory web that you go through as you move in the public space. Then we've got Kent Mcdougall is an oil and gas marketing specialist, but quite a bit more than that. He spent a lot of time Goldman Sachs, Credit Suisse, structuring big gas storage deals, pretty much anything downstream. And so I'm a geophysicist by trade. I spend most of my mental energies below the ground most of the time, Kent spent his entire lifetime with financial instruments and downstream marketing agreements. He understands the commodities, what's driving them. So we lean on him heavily to when we're doing our hedging programs, when we're looking forward to what we think oil and gas will do over the next 12 months, that type of thing. So that's just invaluable, that downstream expertise. Just have to have that at the table. And then Jeff Chisholm is he's president and CEO of a company called Pan Orient Energy. He's technically one of the sharpest people that I've ever run into. Spent a lot of time looking around the globe at acquisitions, spent some time in the public equity space. So at any point that we ever look to another jurisdiction, he has a network and experience, but he's also just a sober second thought so that he can call bullshit on me if I come up with a stupid idea. So it's you got to have people that are going to be there to just keep you honest. I think the key thing with our directors, they're all shareholders in the company. They've put money into it. Our executive and directors as a whole, we own 15.4% of the shares of this company. So, there's always performance options, things like that, that reward you if you're successful. But I think it's important to have your executive and directors with money in the game, so they've got defense in their mind as well as offense. So.
Well, you speak of success, and I want to talk about a recent acquisition that you had. I believe you had completed it in March. And if you could give me a few bullet points as to why that's so significant, and what's that been like since the completion of that acquisition?
Okay, the significance of it is sort of in three parts. The obvious attraction for us in Southeast Saskatchewan, this was a block of assets that's been very inactive for the last 7 years. We've worked around that asset for 15 years, and we have a lot of opportunities, things we want to do on it. So we think we can double that asset within this next couple of years. Kaybob that I mentioned in Alberta, again, very strong asset. Dry gas used to be trading around $2.50. It's been up to $6-7. These are 8 zones, a lot of shut-in gas, pipeline reactivations, a lot of low-hanging fruit for us to go after, and a big Montney gas reserve that's in place right beside Paramount's Kaybob South Pool. So really good growth engine for the company. And then the third piece that was extremely interesting to us and really represented over half of the value in the opportunity was a 2.1% interest in the Weyburn carbon capture unit. And so what's so interesting about this unit is this is one of the biggest enhanced oil recovery projects using CO2 as an injection fluid or gas. And it's operated 65% owned by Whitecap Energy or Whitecap Resources and operated by them. And very well run pool. It's got a plan to expand its production over the next 10 years and about a 40-year reserve life. So rare in the oil and gas business is an asset that actually increases in production with time. You typically are declining. This asset, according to their 5-year plan, is going to gradually increase in production. But also very importantly in this world with ESG as a focal point, the CO2 that's put in every year into that pool and will eventually be left underground represents about 86% of what we will produce as a company. So our CO2 emissions across our entire corporation right now, 86% of that would be offset by permanent injection into that formation. So that's a very unique story on the CO2 front. So we do all of the other responsible things that we can in terms of capturing our gas, zero emissions at the wellheads, things like that. But very few companies actually have an active CO2 injection as part of their production base. So blue chip asset. That Weyburn unit is coveted by all of the owners of it, and we certainly appreciate having that in our portfolio.
Yeah. Now, I still have a couple more questions, but I do want to make sure I give you kind of the floor, Cameron. Is there anything that you were hoping to discuss? Anything that you were hoping I would ask you about? Anything you're hoping that potential investors listening to you right now can get some insight on?
Yeah, I just think some growth catalysts for us. The latest program that we're focused on, we're busy drilling in southeast Saskatchewan, so we've actually initiated the 10-well drilling program that'll start that growth, and looking forward, hopefully in early July, to be able to provide some kind of meaningful update on the results of that. We've just finished our second well and just putting those on production next week. So hopefully we've got something useful to tell the markets in early July. We would expect to have that all wrapped up sometime early September. And at that point, we can give a little better line of sight onto how much we grew production, how much we think we've contributed to reserve growth and that type of thing. But it's exciting. I think we've done a good job digesting the asset into the corporation. We've picked up an office in Calgary along with a very experienced staff that are focused on the Kaybob asset. And we're moving on now to drilling and operations. So exciting times for us.
And I appreciate the insight on that. Now, obviously, look, physical health is important, mental health is important. Let's talk about financial health, though, when it comes to your company, especially because I believe you had some movement there. Talk to me about the financial health of your company looking ahead.
Yeah, so we carry a philosophy with respect to debt that we will hedge production in order to protect it. So as part of this acquisition, we took on a $65 million line that was part of the debt package going into the acquisition. And we're very aggressive about paying that out. Right now, our capital budget for the year we'll spend about 18.2 million on drilling and workovers. Debt and debt servicing will pay about 29 million back on that. And that'll leave us with about 14.5 million of free cash flow if we use $100 oil against our hedges. Our belief is we'll be able to pay that debt completely off within 2 years and still execute on our capital program. So part of the financial health for us was keeping a good war chest of working capital in hand. So we're sitting at about 10 million Canadian in the bank, very strong cash flow. And then we pre-sold about $100 million worth of oil and gas over the next 2 years in order to provide that coverage on full debt repayment, maintenance capital, and G&A. So financial health, I think we're all experienced oil and gas people. We have been through the roller coasters. I personally believe we're in such a supply short right now that we're in for probably a 5-year high on this commodity cycle at least, but we never take anything for granted. We protect our debt with hedges and we'll continue to do so.
Cameron, we got a couple more minutes here, but I'll give you the same opportunity I gave others. 6-month outlook. If you and I are having a conversation in December, what are you hoping to have achieved by then?
Yeah, well, we will have completed that Southeast Saskatchewan drill program. So we'll expect to have grown our production to over 3,500 BOE a day. More significantly, every well that we're drilling right now is a setup well that sets up additional locations and grows the reserve report. So we'll be looking for a fairly substantial bump on the reserve report at year end. And that growth in production and cash flow and the reserve report is really the focus that we have in front of us. In the background, we're working on a fairly important drilling program in the Montney gas up at Kaybob for Q1 of 2023. So we'll be doing a lot of workovers and pipeline reactivations up there and just getting set for the winter season. And then Kaybob will likely be the growth engine for the Q1 of 2023. So that work will be going on, and I'll be able to, once we check what the price decks are and everything, be able to, December, we'd be talking a little more about that program.
Love it. Cameron, thank you so much for spending your time with us this morning. We got a chance to talk about the past, the present, and also the future outlook of your company. And this is Cameron, CEO, co-founder, and chairman of Rock Resources. Cameron, thank you once again for your time.
Great. Thank you. That was fun.
Yeah, take care. Hopefully we can get to talk to you soon. We've still got a couple more companies. The next one, some of you may have known, or some of you may know, may have traded it yourself. But we've got Harry, who is the CEO of Imperial Petroleum. Harry, how are you?
Good morning. How are you?
I am doing great. It's a pleasure to talk to you. Especially, I know we already saw a few chatters in our audience excited to have my conversation with you here. But hey, I think my niece might be watching as well. So if you kind of explain it to me like I'm 5, what it is that your company does.
Okay, no problem. As you know, we are a fairly fresh company. We got spun off from the affiliated company Stealth Gas in December. So we've been only listed for about 6 months. We've become, I think, the 7th most traded US stock these last few months. What do we do? So we own 8 oil tankers. So we move crude oil and oil petroleum products by sea. And the idea is obviously to grow the company, and with the help of the market, meaning the freight market and the capital markets, grow the company to be a major ship owner and transporter of crude oil and crude oil byproducts, essentially.
Now, let me just look. I'm going to take a quick pivot here. This wasn't part of my questions I wanted to ask, but man, the crazy run that you've had with traders and IMPP, and you mentioned how heavily traded it was. What's that kind of been like with you and the other executives and your employees? Has there been a lot of buzz and excitement over your company being discovered?
Look, as I told you before, we were spun off from another company called Stealth Gas, which does exactly the same business, but on the gas side, not the oil side.
Right.
And that has been public since 2005. So for a very, very, very long period of time. So when we were used to seeing a daily average volume for Stealth Gas of a region of, let's say, 100 to 200,000 shares, when with IMPP, which, as I said, is only 6 months old, we see average daily share volumes of 50 million, 60 million, some days to 200 million shares. Obviously was a first for us. Obviously, we're delighted that this company has been chosen by the majority of the retail investors to play with. The last few days obviously have not been good for all kinds of stock, and especially energy stocks. And either we like it or not, our company is is correlated to the crude oil price. So when the price of oil falls, our share price falls as well. One thing we need to say to the people that are watching us is that the NAV per share is approximately $1 to $1.2.
Yeah.
So we're trading at a big discount to NAV. So if people believe it's not the end of the world, and if people believe we would be using more oil in 2023, then obviously it's a cheap price. Today is a cheap price. On top of that, one of, I think, biggest advantages is that the company has approximately 12% of debt only, and a lot of cash, which will be used to acquire more oil tankers and therefore increase our fleet and increase our income generation. So these are a few points which I think we should put out there, because on these chat rooms, you see hundreds of comments, and especially on IMPP, which has become so popular.
Yeah.
But don't know don't know that the company is so underlevered. People don't know that we still have a lot of cash that we need to deploy in order to be able to grow the company to 12 ships, 15 ships, 20 ships. Anything above 15 to 20 ships, you start to be considered a major player in this industry.
Well, people definitely love your company. We've seen our viewers kind of get more active in the chat. Matter of fact, I've got a question from Tariq in the chat, and he's asking, please ask him regarding his winning bid for vessel. Would you be able to speak to that a little bit?
I don't really understand the question. Winning bid. I think
like winning bid for. Yeah, go ahead.
Yeah, if I get the question, because it's not very clear, there was an article that our company had participated in an auction for a ship, for an oil tanker. We were not the winners in that auction, and we are happy that we were not the winners, because that ship had an Iranian background, and obviously as a US listed company, we might have problems trading that ship having Iranian background. So we did not buy the ship, and actually we're happy that we did not buy the ship, if that's the question.
Okay, I appreciate you adjusting and answering our viewers' question there. Now let's kind of dive into what the topic of conversation has been in just about every American household. Rising price of gas, right? We know how it's impacted the consumer at home in an unfortunate instance. How is it impacting your business on a day-to-day and also looking out?
Yes, I mean, obviously, the without wanting obviously to forget that all of this that was happening with Russia and Ukraine was actually a very, very bad event, and with very, very grave consequences. Putting that on the side, for our business, it's been good. As you know, we are a company that transport oil, and that oil is transported with oil tankers via sea. So with the war in Ukraine and the sanctions on Russia, there's been an even bigger lack of energy, oil and gas, more sanctions on Russia and on Russian oil exports, more ships having to do longer voyages to carry the oil to Europe and to the United States. And that has created a two-tier market where companies like us that can trade with both Europe and US, as we are a European company listed in the US, can benefit from. And now I do understand that for the consumer, this is a very bad period of time, because you have high energy prices combined with rising interest rates, combined with inflation.
Yeah.
But for our business, it has been good, and that's why we hope that when we announce Q2 results, people will see the difference from our Q1 results. Already, our Q1 results were better than our Q4 results. We hope that Q2 results are going to be even better, and hopefully Q3 results are going to be better than Q2 results. It's a new company. Our fleet has not yet, as I told you, been completely built up.
Yeah.
But because we have money and because we have very low leverage, we have a very strong balance sheet to acquire good ships, if obviously we can find them, because at the moment it's a very hot commodity, and everybody wants to find big crude oil tankers and product tankers because of the shortage of energy that we just discussed. Now, how long it will last, that's a very difficult question to answer. That might depend on how long the sanctions stay on to Russia.
Yeah.
Because I'm hearing, I'm not a politician, but I'm hearing that even if the war stops, the sanctions will stay for another 2 to 3 years. So you can understand that what that will mean for the gas price. And you also can understand what that will mean for MPP being a positive driver.
Yeah.
On the other hand, obviously, the US, as you know, at the moment cannot and doesn't allow exports from Iran and Venezuela,
Yeah.
which are quite big oil producing countries.
Yeah.
I think from what we're hearing, Venezuela is slowly opening up with the approval of the United States, and Iran is in the process of trying to open. So if that's the case, that will help alleviate a bit pain on the oil prices and the consumer, what the consumer pays for his energy bills and for his gasoline price. But again, all those things that don't depend on us. It depends on the U.S. foreign policy. But I think Biden has understood that people are suffering, not only in the U.S., in Europe as well. Prices are very high. So as they cannot take oil from Russia, they'll have to take oil from somewhere else.
Yeah.
And the obvious solutions are Venezuela, Iran, and try to push Saudi Arabia to export more oil as well.
Now you mentioned you're under levered. I know you said there's certain things that could possibly, right? We don't know for sure, but could possibly happen that could be a positive catalyst for your company. But a question for you then is, how many ships do you believe you will have acquired, in your opinion, by the end of 2022? So by year end, how many ships do you think you'll have?
Look, I mean, the end of 2022 is not that far away anymore. We are already in July, essentially. So we have 5 months left. We started the company with 4 ships in December. We've already doubled the fleet. We have 8 now. We don't want to. We are always very conservative. We don't want to overpromise. We prefer to underpromise and actually do better. I would say by December to be in the region of 12 ships. So probably adding another 4 on top. So
okay,
not easy in this market, but this is what we'll try and do.
So let's go a little bit further outlook, right? You're saying you had 4 in December, halfway 6 months later. Now you have 8, another 6 months. You'll add 4 more. That's 12. Let's go ahead and talk at the end of 2023. Are you able to properly give an idea of how many ships you'll have acquired by then? So let's give you a little bit more time.
Look, that's even more difficult because as we've discussed, we don't know what will happen to the tanker market. We don't know what will happen to Russia and the sanctions. We don't know if Venezuela and Iran will open up or still be considered sanctioned countries. We don't know what's going to happen with inflation. We don't know what's going to happen with how high the interest rates will go. But again, I would say that if we succeed in having 12 ships by year end, by year end 23, a conservative view would be 16.
Okay. Hey, and I appreciate
total 16.
Okay.
And just to show your viewers that obviously we are not throwing numbers, random. When we listed Stealth Gas on the Nasdaq, we had 9 ships, and 3 years later we had 28, and 3 years ago we had close to 50. With a very, very conservative balance sheet, with a very conservative chartering strategy, and a list of blue chip charterers. So we've done that already on the gas side. We'll try to replicate it on the tanker side. It's not that easy because of all the other factors that are out of our hands. But if things stay approximately as they are today, this is the goal that we have set.
And Harry, I appreciate you kind of answering these questions with the best accuracy that you can, because I understand there's so many things that we may not be able to predict. But how is your company preparing for any situations where you'll be blindsided, right? So let's talk about the financials, and also I want to kind of slide in there if you're planning on doing any offerings in the near future.
At the moment, obviously, we are quite cash rich, so there's no imminent need for more offerings. We had said from the beginning that we are a small company. We were a small company, and obviously we needed to raise equity to be able to fulfill our plans. We've said it from day one. Some people were happy with it because they understood. Some people were upset, but that was communicated from the beginning. At the moment, because of the state of the capital markets and because of our current balance sheet, there is no need for an offering. Obviously, come autumn, come winter, we might have expanded the company, we might have spent the money, and we might go out for more. But that's something again that we cannot foresee accurately, as we have so many moving parts.
Sure.
The point is, as I said, the NAV per share is at the region of $1 to $1.2. We're trading at the moment at approximately $0.50, so that's approximately a 50% discount to net asset value. So if people have patience, they can make good money. I think you've seen our stock has been up and down. People that did not sell at the bottom and kept the stock and believed in us made a lot of money. I know that the sentiment generally is not very good currently, but you know what? This is how money is made. People that are patient and they don't throw the towel in the end make money. So, people don't like the company, they can sell the shares. People that believe in us and think we can do what we promise should keep the shares, because if we had financial problems or if we had too much debt, I would understand people being scared and selling the shares. But we are not in that position. We are in a very good position financially. We have the track record from the previous company, so they know we are not, out of the blue promising things.
Yeah.
And it's a brand new company, so I think that we've already showed that we can do it in 6 months. So I think we can get to the number of ships that we said a few minutes ago.
Now, I want to make sure that this conversation and our conversation here in the next few minutes is more geared towards the long-term investors, right? So that's where this line of questioning is coming from. Oftentimes people see offerings as a very bad thing. It is my opinion that when investors and traders see offerings, it's a bad thing. But you're making that offering to have an investment into your company so that you can grow, is what I'm thinking. So when you're having these investments made, whether into ships, vessels, whatever else it might be, how long does it typically take for you to kind of see a return on investment and get to profitability?
That's a very good question, because people believe that we raise money on a Monday and Friday the money is already working itself back. It doesn't
That's
work
not
like
how
that.
it works. It's not a 7-day profitability.
I wish, but no. Imagine that if we decide to put this money into building a ship, which we haven't done, that means 2-year wait, because a ship takes between 2 and 2.5 years to be built. But this is for the long-term investors. These people don't give you the money to see the return in a week. They understand that you have to grow the company. You understand that you have to order brand new ecological ships, and so on and so on. In StealthGas, we've done it. We've ordered a lot of new buildings. People were patient. The ships were delivered and are now making money. Here, we're not saying anything like that. Obviously, we are not prohibited by ordering new ships, but the priority is finding second-hand ships that we can indeed buy relatively promptly, put them to work and make money. That process is, I think, a process of about 3 months, because when you get the money, you then need to find a ship. You spend approximately, let's say, a month to locate a reasonably priced and good condition ship. You sign the contract to buy it, and then the seller has approximately 60 days to deliver the ship to you. So the last offering we did was approximately a month ago. So I guess the clock is ticking. We need to do something, and we will do it. But obviously, the best decisions are not taken in a rush. People should understand that. But obviously, the money will be put to work. That's keeping them in the bank, even with the rising interest rates, doesn't make any sense. So the money will be put to work. We will grow the fleet as promised. And I hope we can even do better than the number of ships I told you 10 minutes ago.
Now, I will go ahead and say this. I have you for about another 60 seconds, but I'm supposed to deal with the market and show stocks and things like that. But if you have time, I'd love to ask you a couple more questions. Do you have flexibility on that?
Yeah, go ahead.
Awesome. So let's have a little bit of fun in this one, right? It is my belief, it is my opinion that something that helped in Netflix was kind of having their in-house content that helped grow their trajectory and their, brand and their prices and their users. And the reason I mentioned that is because you mentioned the possibility of having your own ship, right? Is that something that's in the plan for you, or is that just an idea that hasn't quite been explored? Because you mentioned it, it caught my attention. I want to ask you a little bit more about that.
You mean building our own ship? You mean not
Yeah,
having our own ship?
correct. Or having, yeah, having your own ship, building your ship. You mentioned that a little bit earlier, and I just wanted to touch upon that.
Having our own ship, we already have 8 of our own ships, so that doesn't make any difference. But building our own ship is something that IMPP has not done.
Right.
Self-gas has done it, as I told you before, and not one ship, many ships. I think more than 15 ships. Self-gas has built in various shipyards. I told you that's not prohibited. At the moment, the prices at shipyards are very high.
Right.
So it makes financial sense to pay a very high price for a ship you're going to get in 2 years. That's why we are not at the moment looking at it. But things change very fast. Prices change very fast. So in the next downturn, that's something we will discuss with the board, definitely. Ordering 1 or 2 of our own specification ecological green vessels and lowering the average age of our fleet when the ships get delivered.
Appreciate the insight. Apologies. I meant build. I understand that you already have your own there. So my apologies on not being clear on that. Let's dive a little bit deeper into the financials, especially the quarter's financials, which you had reported last. Any highlights that you want our viewers to know that may not have read the quarterly financials?
Look, there is no point to overanalyze financials of a company which is in growth mode, because each quarter is different from the previous one as the fleet is in a changing state. If our fleet was, let's say, stable at 10 ships every quarter, then you could compare apples with apples. Now we had, previous quarter 4 ships, not previous, sorry, initial quarter 4 ships, last quarter closed weight because some were not delivered. Now this quarter we're going to have more, and therefore it's not very easy to compare quarters that are not equal. For me, let's say 3 most interesting pieces of information from the quarter was, one, obviously the net income, because as I told you, from a loss at the beginning, we came with a profit, not a big profit, but that shows a trend.
Yeah.
2, the percentage of workability of the ships, because if the ships have repairs, if the ships have dry dockings, if the ships have off hire, the percentage falls. If you look at the percentage of the last quarter, was very high, which means that ships were running back and forth like trains with very little downtime.
Yeah.
And for me, in these difficult times, having a very strong balance sheet with very little debt is a huge shield to our shareholders. So for us, having all this cash that we've raised plus only 12% debt has been an amazing advantage in today's environment, especially if we want to grow further. People forget that. People get too focused on the share price, and they don't look at the fundamentals. And that's why I want to re-emphasize it, that when the NAV per share is $1 to $1.2, trading at 50 cents or thereabouts, or buying the stock at these levels, I guess your downside is quite limited.
Now, we've had quite a few viewers join us since you and I started talking about maybe 25 minutes ago. So I'll give you the opportunity to kind of speak to what do you believe the market has a misunderstanding when it comes to your company? I'm not necessarily talking about the share price. I'm talking about the fundamentals and the financials and different things. You already talked about ships and you just about quarterly earnings as well. But what do you believe the market has misinterpreted or has a misunderstanding when it comes to IMPP?
Yes, I mean, I think a lot of investors haven't really understood what exactly we're doing. That's why I wanted to clarify that we transport oil and oil petroleum products with our own ships. One, two, some people have not understood the strength of our balance sheet. I think they think that we are raising money because we need it for the balance sheet, which is wrong. The balance sheet is already extremely strong. Three, people think we are raising money and essentially we have no use for it, which again is wrong, because already we've doubled the fleet and we're going to, as I told you, grow the fleet further to hopefully 12 ships by year end. So the money is going to be put to work as fast as we can locate credible assets. Four, people believe that we woke up one day and decided to become listed and decided to become ship owners. That's not the case. I've been doing this business since 2000, and that's my second US listed shipping company. So that's another useful piece of information. And four, people, when the stock price falls, start becoming desperate and think that they should sell or they lose the money. Wrong. This is the stock market, and unfortunately, it's been a crazy ride. But when the balance sheet is strong, and when the market is strong for oil tankers, why should you be desperate? The stock price 6 months has gone from $0.50 to $9, back down and back up again. People that did not lose their patience and that did not lose their coolness have made 300, 400, some people close to 1,000% return. So, on top of that, I have not sold a single share of mine, which is also very important because I'm on the same boat with all these people. And I'm the largest holder of IMPP preferred shares. And if some people don't want this wild ride of up and down of the common shares, they can buy the IMPP preferred shares with a ticker symbol IMPPP, 3 Ps instead of 2 Ps, which gives a very nice coupon. It doesn't have the crazy ups and downs, but pays a very nice coupon. So it's a very nice bond-like instrument.
Yeah, it looks like that's kind of... Go ahead, I'm sorry.
I guess most people want the crazy ride. I think so. That's why we have this crazy daily share volume. But guys, don't sell at the bottom. Be slightly patient and hold the stock. The company will grow, the fleet will grow, the income will grow, the earnings per share will grow. So why sell at a 50 or 60% discount to NAV? Why? If the company was going under, yes, but we're not. I mean, we're in such a good financial position. Even Stealth Gas, which is our mother company and which has 1 billion in assets, has, I think, close to 30% debt. We have 12% debt. So we are better capitalized than our old mother company. So be patient. Let's see what Q2 will come with. And let's wait, hopefully, for us to announce more ship acquisitions, I think.
Yeah, and again, for the folks that are joining us, you had mentioned that you had 4 in December, you have 8 now, and you're hoping to go ahead and add another 4 for a total of 12 by the end of December. So I just want to kind of ignite that conversation for the chat, just in case they missed it. But Harry, it's been an absolute pleasure. I appreciate you giving us a little bit more time of yours to kind of have this conversation with me. We got a chance to talk about, where you've been and where you are currently, and also where you're looking to go in terms of ships, vessels, your financials, and also the misunderstandings that the market may have of your company. It's been an absolute pleasure. Thank you so much. And I really do look forward to us catching up here in 3 to 6 months.
Thank you very much. And I remind to all our friends, the investors, buy in the dip, not the opposite.
Love it. You've got some interesting fans and retail investors as well. Thank you so much for your time, Harry. Hope to talk to you soon.
Bye bye.
Take care. That was a lot of fun. We've got one more interview, but that's going to be in about maybe looks like 11 minutes. So you and I kind of get to hang out, chat. But again, I will go ahead and say this, and this is not just Benzinga's opinion, it's my opinion as well, that we're giving you just a little bit of a taste of what the companies provide. We're trying to give you a little bit of insight, asking your questions from the chat and questions that our researchers have done here at Benzinga as well. But ultimately, we want you to kind of do your own due diligence and kind of decide if it's worth your hard-earned money and if this investment should be a part of your portfolio or not. I do want to take a look at the overall market since we have about maybe 10 minutes till our next interview. So bear with me while I go ahead and kick up my charts here. I have alerts set on my Thinkorswim, and of course I didn't think about it, but they were just kind of going off. So I know we've got some interesting movement. So here's what we're going to go ahead and take a look at. We're going to go ahead and I'm going to kind of just show you some charts, see what the market's been up to, and then in about 10 minutes we'll have our last interview with Dennis. But let's take a look at the movements for today. You know, one of the companies that I always take a look at is going to be NVIDIA, AMD, and kind of like the semis. That's just what I've always loved trading. It looks like NVIDIA had a nice little move to the upside there. Let me actually open up our chat here and see what we've got going on. And hey, appreciate, by the way, all of you that kind of have joined us so far, especially for that interview, but also the other ones. And again, we've got another great interview coming up in about 9 minutes. But let's kind of see if we can find a little bit of a review of the markets thus far. And of course, hey, if you loved and enjoyed the interviews, don't forget to smash the like. It obviously helps us out because we spent all this time, money, and energy to get you some insights from the companies themselves, from CEOs, from presidents, from the executives. We ask you to ask questions, and we ask those questions straight to them. It's not many places where you get a chance to do that. So definitely go ahead and smash the like, show us some love on that. And here's where the SPY is currently. You've got SPY trading at about 386. Looks like at the moment, it's just having a bit of trouble breaking that 387.25 area. But a nice little bounce off of VWAP. I personally love the VWAP. That's the yellow line that you kind of see here and kind of gives you a little bit of guidance, right? Because nothing in life is 100%, or else we'd all be like Elon Musk and we'd be filthy rich. But it's giving you a nice little trend to the upside here. So if you're looking to go long, you've got to go ahead and break this 387.25 that's acting as resistance, and then maybe you can test that 290 level. But the best risk reward is going to be if it comes back down to VWAP, in my opinion, which is going to be about that 385 level, and that yellow line is VWAP there. So if you can wait and hold on to waiting about maybe another couple points drop, you can maybe go ahead and buy the dip there. Let's see what the Qs are doing. Similar story, having a little bit of trouble getting over the 293.50 area. VWAP is right about 291, solid area if it wants to come back and test it. You can see the dip gave it right around 291.15. It gave you a chance to get about another point or two there if you got a chance to buy that one. And let's look at our beloved Tesla. Look how well VWAP held. This is a 5-minute chart, by the way. You can see 5 minutes there. Tesla went ahead and held VWAP there at near the 728 area. And we obviously always talk about the $700 level, even in after hours yesterday. You can see 700 is right here. And it went ahead and held that level. I personally love the psychological levels. So you have 50, 100, 20, 10, 700, 500,000. Anything that kind of ends in whole numbers is a pretty solid point to look at getting an entry or an exit on those tickers. Let's see. Let me go ahead and take a look at the chat. If there are any tickers you guys want me to review, let me know. By the way, appreciate you guys having 137 likes. You got 300 people watching. Again, we have another interview in about 7 minutes. That we're going to have with BioLargo. And Dennis is going to have a conversation with us about what's going on with that company and what our investors can kind of take a look at for the future as well. Now, it's kind of important to take a look at the VIX. Let's see how the VIX has been acting, because 30 has been the resistance, or excuse me, yeah, about 30, because you're looking at 29.80. So 30 has been kind of resistance there. And once the VIX dropped, you had the market kind of boom on down to it's move on up to the upside here. Let's see if the chat has any questions. OKTA, well, sure, we can try to review that one for you. OKTA, I remember the pandemic low. I'm not going to look at it yet, but I believe the pandemic low on this one was about $2.60 is my guess. Okay. And let's see if I was right or wrong here. Where is the pandemic? Right around here. Let's see where the line on this one is. I was very long. Oh, you know what I'm thinking about? I'm not looking at Octa. I was looking at another stock. That is my bad. And that's the crazy thing about doing this live is because you can't erase your mistakes. You can't just delete it. But anyway, let me go back to the viewer's question here. I think I was looking at Overstock as a stock that I was thinking about there. But regardless, look at where the resistance is on this one. Looking to kind of break that 98.92. Now here's what I'll say. I talked about whole numbers possibly being support and resistance. If it breaks the 98.92, you've got about $100, but you've got about $1 before you deal with the $100 area, right? So resistance, risk reward, you're getting about $1 in a reward, but your risk would be kind of like near VWAP, which is about $2 to $3. So not the best risk reward if you want to play the breakout. I would prefer to play it near VWAP here around 97.62, and then your stop loss can be right here, 96.78. So you're risking about $1. And then you're hoping to kind of come back and test the highs of 98.92. So right here, my opinion, not a financial advisor. Do your own due diligence, but VWAP looks to be holding at the moment. And of course, it depends on how the market wants to kind of react overall as well on OKTA. I'm pretty sure, was that Overstock that I was talking about? I know I'm not crazy. See, OSTK. Now, this stock, I believe, went all the way to hundreds. Yep, it sure did. And let me see if that pandemic low I was talking about was real. Yep, there it is, right around there. See, I knew I wasn't crazy. About $1.88. And then it went all the way up to the 120s and then some. And then a little bit of a consolidation, obviously downward move. It's been on a downtrend since. And now it's at $32. So if you're a retail trader, if you're a swing trader, if you're an investor, don't be afraid to take some profits if you believe it's in your best interest. Let's take a look at what's going on in the futures market here. So actually, let's take a spy at the daily. You can see all my pretty crayons. And again, if you just hang out with us for about 4 minutes, we'll go ahead and have that interview with you. Let's see what NVIDIA is doing here on the 10-minute, shall we? Yeah, NVIDIA's coming to test this 168 level. VWAP is right near there too. It's about 167.68. Decent little pullback. And again, what I do is pretty much make sure that I'm buying on kind of like dips, right? So I like to buy pullbacks. Sometimes I'll buy breakouts, but it's obviously a little tricky because you can get stocks can pull back on you quite a bit there. But NVIDIA is kind of coming down to test this EMA here. And these are the EMAs that I use for anyone wondering if you're a new viewer. It's created by Ripster. So I use Ripster's clouds. And you can kind of see here are the inputs. If you want to take a quick screenshot, you can go ahead and do that. If you want to use it, again, this is not mine. I cannot take credit for it. It's Ripster's creation, and we're just kind of using it. It's really great because you kind of get an idea. If you want to look at it at the 1 minute, 5 minute, I typically look at it at the 10-minute, but you can kind of see where the trend is going. And then you have the trend and you have your lines and you have resistance. Then you kind of have an idea of where to sell stock and if you need to get out or not. Because you can see the trend kind of broke here at the 5-minute. And so that would typically tell me, hey, go ahead and get out. But let's just quickly take a look at the SPY. Yep, looks like it's trying to break trend there on the EMAs. But give me a couple of tickers. We got about a couple of minutes before I get a chance to bring Dennis up. But if anyone has any tickers that y'all want me to take a look at, please let me know. Show the settings. Sure, I'll go ahead and tell you what. I'll show the settings, and I'll see if Dennis wants to hop on with me for about a minute earlier than planned. Where are they? There they are. There you go. I'll leave it up there for about 15 seconds. Feel free to take a screenshot, and then we will continue with All Access. You want me to take a look at Luna? I don't know if I can chart that big of a disaster on Luna, but all right, one more stock, and then we'll keep it moving with the show. You've got so $10. I love so the closer you can get AERC to $10, the better in terms of risk reward. On the daily, doesn't exactly look that pretty, but the closer you can get it to $10, the better. And the reason I'll give you an example is if you look at Hood, obviously it's below $10 now, but before you can see that the $9 was here and then the $10 it was trying to consolidate around. And before it kind of finally broke below, The $10 is holding there to give you a little bit of a bounce there. You can see I've got a bunch of charting on this one, but enough about me. Enough about, let me go ahead and, not remove myself. I almost removed myself from here. That wouldn't be great. All right. So again, I know we've been looking at charts and things like that, but I remind everyone that this is all access and we're taking a look at hot stocks in the energy sector. We've gone through a few great companies that we got a chance to talk to CEOs. You guys in the chat got to ask some questions as well. So let's go ahead and move on to the final conversation that we're going to have today. And that's going to be with BioLargo. It's going to be with Dennis, who is the president and CEO. Dennis, how are you?
Hey, great.
Appreciate you hanging out with us. I hope it's okay. But actually, we got it right on back on time. So I appreciate you hanging out. I've been telling people, look, my niece is watching, so I'll do the same thing with you. Tell me what your company does as if I'm 5 years old.
So BioLargo is an innovator and solution provider. We've been innovating for about 10 years, and we have a full service engineering firm as well, focused on sustainable solutions for some of the biggest problems that face our planet: clean air, clean water, cleaner earth. Really specialists at remediation, a lot of remediation work. And we've got projects and major growth catalysts occurring all around the company. It's a very exciting time, and it's been a long journey to get here. And so we're now seeing the seeds grow and blossom, and the fruit of our investment is starting to pay off. So it's pretty exciting.
Yeah. And I believe you've got a deck with us as well. Would you like for us to put that up?
Yeah, sure. Whatever.
All right. And then whenever you're ready, if there's any slides that you want me to refer to, please just let me know what slide that is. And I'll go ahead and show our viewers that so they can kind of take a look at it, because I'm a visual learner. So that definitely helps me. But let's go ahead and dive in. How big is the market for companies that are attempting to eliminate these chemicals, right?
The PFAS.
Sorry,
there's a bunch of competition, so don't miss that. I mean, this is a field where, forever chemicals, right? That's what we're talking about. Per and polyfluoroalkyl substances, PFAS is the nickname, right? And if you do an internet search, you're going to find that these things are everywhere. And this is the nonstick coatings that were used. There's a fluorine compound that's tied to that formulation, and they put them everywhere. They put them in cosmetics and food, and nonstick coatings for Teflon and for carpets. And it turns out that when you have such a small molecule and you put these parts per trillion doses out in minute quantities, it turns out that, of course, nature has a very difficult time breaking them down. So that's why they call them forever chemicals. They said they hang out forever, okay, like 30 years forever, right? And so as it turns out, of course, as you look back, small things that don't ever go away actually create a problem when they accumulate. And so they've been linked to adverse health effects like birth defects and cancer. And there's a real outcry. It's one of the top administration issues for the White House, the Biden administration. EPA has got their targets set on these polluters. And so there's a whole industry emerging, and it's really big business. When we started, we thought, hey, these will be $500,000, $1 million kind of projects. Well, it turns out they're more like 3 to 10 million for 20 years. I mean, this is almost like a super fund cleanup thing, right? And so it turns out when you really start testing, and the science has come so far that they can test in your body now, but they can also test in soil and water. Well, that's where our specialty is. Our team's been doing remediation projects in that area for 20 and 30 years. So we really are technical specialists in the idea of how to tackle those. We came up with an innovation called the AEC. Most people think it's about an $80 billion a year market. So, how does a small company, we're not huge. We've got about 35 people, another 20 something subcontractors, but we got some big, as we say, we're swinging way above our weight. I mean, we got some huge projects that we're involved in, a bunch of them. And they're so big, the question everybody asks is, how are you going to do that, right? Well, as we say, we lean into the partnerships pretty heavily, because in order to scale for the kind of volume we're talking about, you need a small army of people, really. Yeah. So the way we're doing that is, and we've always said in our innovation cycle, what we want to be is the team that finds the cutting edge of the solution, gets it through that innovation and an early adoption stage, and then as fast as we do that, make the deal with a partner, right? And so that's what's happening. So we've got a bunch of channel partnerships in negotiation, big engineering firms, groundwater remediation specialists, people that already have feet on the street, customers with the problem, and we can bring to them super technical knowledge with innovation that can solve that problem in the most efficient way. So So PFAS is a big one for the portfolio. Now we think we've got our first client identified. So these other two are, by the way, really much further advanced. We've got a couple that are actually under contract and advancing.
Yeah.
The PFAS is right on that edge, about to go commercial, and everybody's waiting for the first win, the domino to fall, right? And so we think we're there. It really is very close. We believe that the technology that we've innovated is going to allow us to propel rapidly into a commercial mode, as opposed to an elongated trial process, right?
Right.
And so that's a trick. That's not easy. That's hard to do. Okay.
Yeah.
What we're doing, and we think we've got an innovation that's going to save, not only remove the pollutants, but also save our customers a ton of money. It's pretty cool.
Now, are you able to give an ETA, or should we stay away from that?
Well, I don't mean to be flippant. Okay. So I want to give
Sure.
lots of words. Okay.
You're okay.
Because
Yeah.
I want to try and help people discern. We really believe any minute. Okay. Any minute could be a week. It could be a month.
Okay.
Because what happens is the size of the projects are so big.
Yeah.
And so while you have this handshake and everybody says, okay, we're going to do it. I mean, my goodness, legal and contracts and all that go into motion.
Yeah.
And so we have willing parties who want to move forward. Okay. So that's a good sign. Okay. Now legal's involved. We're finishing projects. We're looking at insurance, staffing, scoping. And the other thing that's interesting too is they're so big, what's interesting, it doesn't happen all at once. When you start a project of that magnitude, you start with step one and then you do step two. And like I say, you don't build a house in a week. You build a house over time. We're talking about building houses. I mean, these are massive undertaking with multi-stage processes. And our thesis about getting into the field is to first and foremost look out for our customer and say, look, whatever's best for you, that's what we're going to do. What's best for you. If our technical solutions are the best answer, great. If they're not, we know how to get them. So with that attitude, what you're really saying is, let me help you, Mr. Client, Mr. Industrial CEO, right? Help you make the best choice possible so you get your solution. And so that is not fast, but man, it's good. Right. And good means you get the right answer and you get the right price. So it's pretty cool.
Yeah, no, that is pretty fascinating. I appreciate you giving a little more insight to our viewers about what you meant by soon. Now I'm going to take a little pivot because I noticed this, but our awesome researcher, Aiden, noticed this as well. Haven't really seen any insider selling in your stock. Care to speak to more as to why that might be?
Well, it's a whole bunch of reasons. I mean, first of all, we chose this tool of a public company to finance a business, not to create an exit per se for the owners, right? And that's important because, of course, everybody wants to make some money, right? So that's inherent in the structure. But if you look at our business, we've taken an extraordinary long development cycle and used that money to invest. We've been inventing and building a company well over a decade. We've got 7 technologies in the portfolio, right? The management team is committed to significant purpose. I mean, really think about our slogan, we make life better, right? It's a pretty high bar, right? So really what we're doing is we're building a company that's going to last well beyond our lifespan. This is a foundation that will last. Why? Because the innovations are that good. I mean, it's a science and engineering company with real solutions solving big problems. And it's going to go on and on and on. We also developed a system so that each of these assets could be sold. We've got a number of subsidiaries, dedicated technical teams. So, we're sitting at a market valuation of probably $40-45 million, right? I think we've just scratched the surface. I mean, if we didn't think this was a 10 and a potential of a 10 and 20 times that number, you wouldn't do it. It's so hard. So we're in this for a big win. A big win. And so as a result, management's really held on tight. We've invested consistently. We've swapped out compensation for stock in perpetuity whenever we need to. And that culture is just not going to change. The other thing is we brought in an engineering group about 4 years ago. We were doing a development project with a 55,000 man firm, big multinational, talk about unequally yoked, right? But we had innovation. And so long story short, that company ran into some hiccups. They had a blow up, laid off 17,000 people in one day. And so we were so fortunate to have a relationship with this highly technical team that had worked together for literally 20 and 30 years together as a team. And we brought them in and formed our own engineering group. So for those engineers, they're owner operators. They run an engineering group. They get to take their 30 years of career, put it to work on the front line in a very entrepreneurial way, share profits, share equity. I mean, we're here to build, not to exit, right? We're just getting started. So I hope that answers.
It definitely does, but let's dive a little bit deeper into it. 6 months, 12 months, where are you hoping your company will be in? I'm not necessarily talking about the stock price. I'm talking about what are some things that you have hoping to accomplish that investors need to
Well, that's
be
a
on the
good
lookout
question.
for?
We're breaking records, not every quarter, but almost every quarter. And it looks like we're going to be on track again this quarter to break another record for top line revenue and reduction in loss. And 2 of our operating units are now heading into the profit mode. Last quarter, we had a profitable subsidiary. Now we've got another subsidiary that's really going to be profitable this quarter. It looks like, it was right on the edge last quarter. Okay, so records are breaking. So that's all organic growth. The way I would describe it is we're just hitting our stride in the commercial market. We're getting a lot of business. Right. We're winning contracts. Okay, so it's really awesome. But there's a whole bunch of initiatives, these what we call catalysts, that leverage the partnership. Those partnerships are launching. Okay, if they hit stride, our numbers don't go double; they go 4 and 5x. Okay, so we did about $1 million last quarter. Right. We should exceed $1 million this quarter. And I look forward and I say to myself, we've got this partnership with Garrett Callahan. Well, they forecast something like 7.5 to 15 million once you launch. So we're negotiating our first customer contract now. It's about $1 million contract. It's awesome. It should be successful. Not done until it's done. But we're in the hunt to win, and we've spent about 2 years in preparation to land those customers. Okay. We also have this partnership for the pet products. Well, they've purchased about $500,000 worth of product. Their numbers are climbing. They're committed to now head into an ad spend for the promotion of that product, about $500,000 a week. Okay. So, and we're the supply chain partner, right? So those numbers are climbing. Then we have our PFAS that's launching. And then this other catalyst that we mentioned is we've got this big contract where we're engaged as a consulting engineer on the feasibility project for a waste to energy conversion down in Latin America. Listen, if it goes through the first 3 stages, it's $50 million worth of work. Okay. So, right. So you look at all those big numbers and you think, holy cow. I mean, sometimes people say, are you having trouble getting a customer? I'm like, no. We've got so many projects. The answer is how do you ramp up your business to support the kind of excellence that we stand for with our customers, staffing and supply chain, right? So, I look forward and I say, look, it's hard for me to say in 6 months what's going to happen because it's still development stage. But I look at these initiatives and I say, can we get 25% of this one and 50% of that one? And listen, they're all 3 and 4 and 5 and 10x of where we're at. So what should happen? Well, we're going to get some of these wins. That's what's going to happen. We're going to knock them down. They're going to flow through. The market really demands financial performance at this stage of the game, right? The story just not going to carry it. We get it. It's taken a long time, and the world's a little upside down, if everybody didn't know, in the capital markets. So as those revenues rise, we think our performance and our valuation will rise as well. And here's the thing: they're not all hopefuls. There's a couple that are actually under contract and already executing. So it's real important, I think, for someone who's looking at the company to say, what's already here, what's hopeful, and yet how hopeful is it? That's a great question. I don't mind. We've spent years, like our Garrett Callahan partnership. We spent 2 years preparing. Garrett Callahan is the largest privately held water company in North America. They chose us. Don't miss it. They chose us, right? Why? Well, we're pretty good. And we've helped them develop a machine that will take calcium deposits and mineral deposits out of water cooling towers. Well, is that a big deal? Yeah, I'd say about 40% of all manufacturing has a water cooling tower. Yeah, and if you can do a modular solution. Now, look, this is a 100-year-old company. Mm-hmm. National sales force, probably 20,000 customers. Can we get one? Yeah. Can we get maybe 10? Yeah. I mean, it's just a matter of time, right? It's just a matter of time. Now, here's the thing. I always say, you win these contracts, but you have to do the work. So this is a lot of work, right? So, and we stand for, we always say we're 99.99 excellent. This is no failure stuff, right? So sometimes you slow down a minute to make sure you get it just right. Well, that's what's happening with Garrett Callahan. We're in that go mode with our first client. And, whatever you do, don't mess it up. Okay.
Yeah.
Because that's going to set the stage for the next 20. And so that's big business. And, and I also want to remind everybody, they forget sometimes 100-year-old private companies, they operate a little differently than small public companies trying to ramp up the growth curve for stockholder performance, right? They don't think that way. The way they think about it is, I got a 100-year history. I've got the most excellent reputation. Whatever we do, make sure you get it right. I'm good with that. We like that. So.
You know what they say, right? It takes months and sometimes even years to build a house, but just a few minutes to burn it down. So
Yeah.
I understand what you're saying there. Now, look, to me, partnerships are important, whether that's with a significant other, best friends, or when it comes to companies, right? So let's talk a little bit about your partnership. Give me a little bit more insight with
Yeah.
Garrett Callahan and how that's an asset to your company looking ahead.
Well, so again, they choose you, and then we choose them too, right? So don't miss that. But this is a company that's got a national sales force, largest privately held, hundreds of salespeople, tens of thousands, if not 20,000 customers. Okay. And they're experts in the field. So we like them for a number of reasons. They're super technical. And I always say, when we get to the super technical buyer, we win.
Yeah.
Super technical, meaning we know our stuff. And the culture is to serve. It's to serve with the best answer and the fair value, right? Mm-hmm. So when you find a vendor who treats customers that way, that's a win. That's who we are. So that's one of the reasons our cultural fit is so good. It's family-held business, family-owned, family-operated, fourth generation. And when you present yourself to them, you've got technical excellence and you got a commitment to service. That's how it works. Okay.
Yeah.
So that's a good one. And so it's just about to launch, and we've got the first couple of customers.
Yeah.
I got to remind everybody too, that when you launch, you're talking about launching a specific solution, but you're really setting the stage for a national sales force. Okay.
Yeah.
And they don't go all at once. They go one, and then they do two, and then there's 5. And next thing you know, a year later, you got 25 customers, and this thing is moving.
Yeah.
And that's what we're doing, right? So that's Garrett Callahan. It's a very nice situation. We like them very much.
Got it. Now, look, compounding works obviously in the stock market with savings and investments. So I can understand what you're saying, where the first domino has to fall, then you can get the other clients lined up as well. I've got a couple more questions, but I definitely want to give you the floor here. If you feel like there's anything that you're hoping I would discuss, any questions that you're hoping I would ask, or anything you think our viewers should know when it comes to investing in your company.
Sure, of course. I mean, these I think the catalysts really tell the story, right? So we've covered a bunch. Garrett Callahan's one of them. The PFAS is huge. This other one is the POOPH product, POOPH, right? POOPH. If you haven't seen it, go to their website. So we're a white label manufacturing partner, leveraging patented technology in our portfolio. And we're on a cost plus basis, and we get a little royalty on sales, and then we bargain for 20% of the exit. No, okay, that's a lot of complicated detail, but here's the deal: this is a group that wants to get to 100 million a year in sales as fast as possible. They've launched multi products that each do $1 billion a year or more. They were the creative genius behind a number of major campaigns like Febreze and Copperfit and Swiffer, big brands. Okay, so they're a big brand builder. Now, most of their work, Jordan Stanley is one of the big creative team members, a genius in his art, right? Artfulness for creating a brand.
Yeah.
And then he's got a whole team of excellence in execution. Well, they came to us and said, look, we think we can make a big national brand out of one of your products. I said, I'm in, right? And we took risks, right? Because while they had that history, this is the first venture where they're also financing the rollout. Yeah. Anyway, they've done a great job. We heard they just won an award as the top performing infomercial award for the year. There's a buzz about the product. They were out on Times Square at the Jumbotron for the last, 6 weeks, running promotional sites. It's got traction. It was a top seller in the Amazon category. They've got some of the biggest, we're going to save the names, but some of the biggest retailers in the world are adopting the product. Okay, so they want to get to 100 million a year in sales, and their prediction is that when they get to that level, that asset will sell for somewhere between 3 to 7 times revenue. Okay, so we bargained for 20% of that. So how do we view this partnership? Well, we get to share in the growth. We get to leverage our asset that we've invested 10 years, probably $10 million bucks building. Right. It's number one performer in the world. We bargain for 20% of the exit. We get to participate while we go. They're financing the marketing rollout, creating a national brand, and their target's to get something like 300 to maybe a $500 million exit. Okay, I'll take 100 million. I think we're going to be okay.
I'll take one too.
Yeah, I mean, right? So perspective. Now that's not overnight, but that's not a decade away. That's years away. Okay, and it's happening really fast. So another way to leverage technology to find a commercial opportunity. So another great partnership.
Yeah. Well, hey, it's been an absolute pleasure of mine to kind of have this conversation with you. Dennis, it's been a pleasure. Thank you so much for spending quality time with us this morning. Look forward to hopefully talking to you in 3 to 6 months and see you achieve those clients and the domino effect that we spoke about here today.
Well, everybody do a deep dive, right? It's not a flyby. You got to peel the onion a little bit. When you do, you're going to like it. So go buy a Largo, right?
Appreciate you. Thank you so much. You have a good day.
Thanks.
Take care. And that about wraps it up for us here. Hope you enjoy the conversation with Dennis here, but also our conversation with all the other great companies we have. We got Africa, United Energy, Desert Mountain Energy, Rock Resources, IMPP, which I know a lot of you guys loved, and of course, BioLargo here as well. And I want to make it very clear that, we have this all access simply to give you a few nuggets of what the fundamentals of the company look like. So have questions answered by the executives themselves and have your questions in the chat answered with them as well. But make sure you do your own due diligence and see if the investments are worth being a part of your portfolio. But I also want to give a big thank you to the men and women behind the scenes that helped put this together. So producer Aaron Thomas, Chelsea, our researcher Aiden, and of course, Michael Murray. Hope you're enjoying good time out there, pal. But on behalf of them, myself, and everyone at Benzinga, thank you for watching All Access.